Hello, everyone. Thank you for joining us on this Wednesday, and welcome to the Specialist Trading educational presentation, where I ask the question, will you be prepared to trade when the market reverses? Now, the reason why I ask this question is we've seen in the last week, the market all of a sudden changes its direction, its energy, right? And it's been very difficult for a lot of traders because, as the old saying goes, everyone's a genius up until the market changes. Everyone's strategy or system works perfectly when it's doing exactly what it wants the market to do. But when the market decides to change direction or to change energy or just its focus, how well does your strategy or method perform? Most of the time, it doesn't perform very well. That's why a lot of people have had difficulty this past week when the market is starting to give us some clues as to which direction it may want to go. Not fully verified yet, but there are a number of warning signs saying that it may want to be headed in the opposite direction. So are you prepared? Now, most traders aren't. And the reason is, and once again, I'm going to include myself when I first started trading some 4 decades ago, because we're based on learning things that have really no consistency in them. These are traditional, worn out ways of trading that for some reason have this urban myth that are supposed to work. But when the market changes or reverses direction, you'll see that a lot of these things don't work. That's why so many traders do not like to trade in a down market or don't like to trade when it gets choppy, because all of a sudden their method no longer applies to the market. For example, let's look at this chart here. And this is a chart fairly recent in Zoom. This is coming into September. Now, if we use conventional wisdom, the same way I was taught some 4 decades ago, we see that this is headed higher. In fact, you could say that we're in a short-term uptrend, right? Higher highs, higher lows. Now, let's say you subscribe to that newsletter the way I used to some 4 decades ago, or you went to a chat room or a trading room and they really liked this stock, which is Zoom, by the way. So you decide to buy it. You say, hey, listen, this is in an uptrend, and Steve always says you want to trade with the trend. So you step in and buy, and then this happens, right? This look familiar to anyone? This is the way most traders trade, because we're taught to base our decisions on sound fundamental things that have worked over the test of time. And in all actuality, they don't. There's actually no consistency in any of the things that we have been taught to rely on, like support and resistance, like earnings reports, like jobless claims, like moving average crossovers, like traditional technical analysis. Just really doesn't have a high level of consistency. Here's the good news. In today's educational presentation, I'm going to show you a very powerful but extremely simple technique that, looking at the same chart, would not have had you buying here at all. In fact, on that very same bar, it would have generated a sell signal. So you could have taken advantage of this big drop and potentially captured upwards of 75 points coming in to this chart, which was yesterday. Okay. Now, once again, our whole philosophy is to make trading simple. That's why Pro Trader Strategies and myself developed the PTS Primo charting platform. This is the educational platform that actually teaches you how to trade, and you'll see how simple it is to actually apply this technique I'm going to teach you today on the PTS Primo charting platform. So welcome to this educational presentation. My name is Steven Primo. If you're new to my presentations, which I give weekly, you'll see that, we're all about educating you. That's really our only goal, simply to educate traders around the world. There is more than enough for everyone to go around, an infinite amount of times. In other words, a lot of students come up to me and say, well, Steve, if your stuff works so well, why are you sharing it with everyone? Well, that's like saying, well, if you developed a cure for cancer or a drug, or even the pill that is aspirin, why would you share it with anyone? To help someone, because there's so much to go around. There are an infinite amount of profits to be made on a daily basis for everyone. So there's no need to subscribe to that mindset where, it's a zero-sum game. It's just silly. That's like saying for every breath someone takes, someone is losing a breath. All right. There's enough oxygen for everyone to go around in the world. Same way with trading. That's why we want to teach you to elevate your trading. It's in everyone's best interest to do well. There's enough for everyone to go around. And guess what? The market is your best friend. It's offering you all these opportunities on a daily basis. The only trouble is most of us don't know how to find them. We've all been taught to look for things that are supposed to work, and the statistics don't lie. Upwards of 80 to 85% of all traders fail because those things really don't work. Now, I've been trading for 44 years now. I started my career on the floor of the Pacific Stock Exchange. I made markets in roughly about 60 stocks or so. I made markets during the crash of '87 in the bull market. So I've seen and traded just about every market environment, just about every system or trading technique you can think of. So I know what works in terms of consistency, and I know what doesn't work. And that's what we do at Specialist Trading. I teamed up with Pro Trader Strategies to simply teach students around the world the things that really work, that have high levels of consistency. And we're happy to say we have students in over 115 countries and in every state in the United States. So you'll see our devotion to really trying to educate you in today's educational presentation. Now, before we begin, once again, we're required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results sharing with you this technique, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. Also remember that since we are an educational company, first and foremost, all examples are strictly for educational purposes only. Now we have a good crowd here today. I'm sure many of you are following us on Twitter, but if you haven't done so already, here's your chance to sign up. There's our handle right there, abbreviation for Specialist Trading. I post different things on a daily basis, anywhere from signals our strategies and methods have generated and a little description as to why they were generated, as well as bits of financial wisdom I've accumulated in my 44 years. So there's lots of great free education on a daily basis. So please feel free to follow us on Twitter. Now, as I said in the beginning statements, we are first and foremost an educational company. You're not going to come to any of my webinars and hear what I think the market's going to do. You're not going to come to any of my webinars and have me tell you what the best stock is to buy that no one knows about or the perfect time frame. It doesn't work that way. That's not the way a good mentor teaches. He doesn't trade for you. He teaches you so that you can make your own decisions. This is the way my mentors taught me. And trust me, I hounded them for months asking them, why don't you just tell me what you're buying and selling? And I'll just piggyback along with you. And they said, well, ultimately, we're not going to be here. And how are you going to make your own decisions? And on top of that, what if you don't like to trade the same way we do? What if you can't sleep overnight with the positions we're holding? What if you like to trade much more than we're trading? What if you like to trade less? You've got to find your own way. So they shared with me the things that have stood the test of time, but they ultimately wanted me to research and paper trade so that I figured out my own way to trade these things. So that's our same concept here at Specialist Trading. You see, a good mentor does not trade for you. He teaches you how to trade. And that's what we really want to do here, teach you how to trade with the specialist edge so that you can not have a good month or maybe even a good year, but hopefully you can have a good decade or two. Okay. Now, a few things before we begin. This is an educational presentation, so please ask me as many questions as you'd like, but I like to take the questions at the very end. Oftentimes, if like other webinars, we stop to answer a question for each slide, we'll be here far too long. I know there's a lot of movement and things happening in the markets. I don't want to take you away. So let's wait till the very end to ask questions, okay? The only question I will answer is this being recorded? Yes, it is. So each and every one of you will be sent a link to this recording once we've concluded, so you can watch it at your own leisure. Now, one last announcement, since this is a Zoom presentation, remember this is not your standard type of interactive presentation. So please disable all of your cameras and microphones, all right? This is not something where we're going to be interacting and looking at each other on cameras and talking back and forth. This is just a static PowerPoint presentation. So if you've joined us late, please disable all your cameras and microphones, and we'll answer questions at the end, okay? All right, with that stated, let's begin today's educational presentation. I want to start out with a theme. I like to have a theme in all of my presentations. I'm going to start out with what my mentors taught me some 4 decades ago. And they said this to me. They said, Steve, the secret to consistency, to being consistent in your trading, is simply to want what the market wants. I mean, think of that. It really doesn't get any more complicated than that. In fact, if it is more complicated, then you're overcomplicating your trading. I mean, so many times we rely on, well, Steve, I've got to see what the earnings are. Then I can't make a decision until they're good or they meet my standards. Or Steve, there's going to be that jobless claim or that, report that's coming out. I have to know what it says before I can make my decision. Or, Steve, there are tons of indicators that are crossing over, but there's major Fibonacci support here, and there's a lot of institutions buying. Do you see how I'm making my trading much more complicated than it has to be? And I know this firsthand because I made the same type of decisions. I relied on all of those what my mentors called outside noise to make a decision. But you really have to just break it down to the common denominator just to want what the market wants. So we have to learn how to listen to the market instead of listening to outside noise, like fundamental news, like earnings reports, like support and resistance, like some guy on TV who's supposed to know all the answers. Forget all of those things and you'll see how simple trading can really be. So think of this. If you're not wanting what the market wants, that's why you're losing. You're buying when the market wants to go lower. You're selling when the market wants to go higher. Okay, it's really just that simple. For example, someone would look at this and say, well, Steve, it's obvious to see that the market wants to go lower. Okay, so I'm going to either get out of this, sell my position, or I'm going to look to short. So let's say you decide to short this and then this happens, right? And you say, wow, well, I was listening to the market and it went the opposite direction. So it's not as easy as it seems. It is simple, but it's not easy. We have to have something to help us listen to the market. So in order to trade in sync with the current trend, we need a tool that really translates what the market wants to do. We don't need a predictive tool. We don't need something to tell us how high or how low something will go. We don't need to tell us when the bottom is or when the top is. We just need something to translate what the market wants to do at that given point. It's really that simple. And there is a tool. That tool is the PET D. All right, you've heard me speak about it before. This was something I was introduced to some 4 decades ago on the floor of the Pacific Stock Exchange, where I worked for roughly 16 years. Now, we used to use this on a daily basis, but it was very cumbersome because it was something we had to calculate by hand, and it was almost on a tick-by-tick basis. It was just literally too difficult to use intraday or find out what the intraday bars were, so we could only use it on a daily bar basis. But with the advent of high-speed computers and with programmers now, we've made it simple for you. So if you're not familiar with what the PET D is, it's a proprietary algorithm. We've taken all the hard work out of it for you and constructed and developed it into a color bar tool. So what it does is it colors the bars either green or red. You will never see a different color if you're applying the PET D. So the bars are either going to be colored green or they're going to be colored red. Now, it can be used as a signal confirmation tool with these green and red bars. But what we want to talk about today is applying it as an early trend detector, because this is where this technique is going to come out. By early trend detector, we mean that it is signaling or translating that what the trend wants to do when normal traders don't see anything there yet. All right, that's how sensitive this tool is. For example, as we look at that chart again in Zion, remember we thought it was going straight down and all of a sudden it changed on a dime and went straight up? Well, if we apply the PET D, it's as simple as just clicking it on our platform. Remember, we developed the platform to make it simple, and the colors automatically change. Now, if you see a series of red bars, the market is translating through the PET D that it wants to go lower. So we had a series of red bars way up here telling us it wanted to go lower, until we had a series of green bars here telling us that it wanted to go higher. So do you see how you can be much more in sync with the market by applying the PET D? That's how sensitive it is. And as it says here, the beauty of the PET D is that it tells you which direction you should be trading. Once you know that direction, with any market, any time frame, you can apply any technique or any strategy, any system that is in sync with that direction. Remember, we said, and today's theme is, you simply want what the market wants. Well, I can't think of a better tool that I personally have been using for 4 decades now that tells me what the market wants. All right, so let's talk about this technique using the PET D. It is so simple, but let me share with you how powerful it is. And we're only going to be looking at downward situations, because if the market, I'm not saying that it is, but if the market starts to go into a downtrend, a strong, extreme downtrend, this is where most traders have a difficult time. All of a sudden, your strategy doesn't work anymore, right? All of a sudden, you start losing everything you just made in just a matter of minutes. And you're thinking, what's going on? Because you're not listening to the market. You're holding on to things that only work in a certain market environment. So I want to share with you this technique, and we're only going to be looking at downward scenarios, because if it does go into a downward scenario, and which can last anywhere from months to years, you want to be able to trade in that environment. So here's the technique. All right, these are for sell setups. Remember, once again, we're only going to be looking at sells. 2 red bars are generated. In other words, you're going to see 2 bars that are colored red by the pet D. Now, red bar number 2 in that series closes above the high of red bar number 1. All right, that's it. So as we look at this generic example here, just for clarity's sake, all right, 2 bars are generated. Here's bar number 1, bar number 2. It makes no difference if this is down or up. It makes absolutely no difference, but they're both generated. And then when you apply the pet D, they're both colored red. Now you see this day was a down day. It opened here and closed lower, so it's outlined red. But this day, bar number 2, is also a down day. And you say, well, how can this be a down day? Well, it's a downward trending day because even though it opened and closed much higher, what is the outline color of the bar? It's red. So it's saying that even though we have a very high, strong day here, traditional wisdom candlesticks would color this bar green. Well, that's not the way it works. See, that was invented by the Western markets because people couldn't understand candlesticks. So they said, well, this is how we'll teach it to the Westerners because they don't understand candlesticks. So a down day will be colored red and an up day will be colored green. Well, that's totally fabricated. It was fabricated by all the programmers and by all the different programs and trading platforms because they wanted to sell you years ago, they wanted to sell you candlesticks. And this is the way most people think candlesticks are. But if you go to the East where they were invented, but in the Far East in Japan, they never used up and down red or green bars to determine if it was an up day or a down day. They were hollow bars. If I go back 1 bar, this is the way they always looked. So an up day was just hollow, had a white background and was colored black. A down day was called a filled in body. But if we apply the pet D, we're still going to keep it hollow. Whoops. Going forward now, we're still going to keep it hollow, but we'll outline it red. So if you don't understand this concept, think of a winter. Okay, wherever you live, we have a number of people here in different states now. I live in the West Coast, but let's say you live back east, where many times it'll get very cold, below freezing. Now, in the middle of winter, all of a sudden, let's say in Chicago, I've seen this many times, all of a sudden you'll get a day in the middle of December or January where it's 75, 80 degrees, all right, in the middle of winter. So does that tell you, is that saying that, well, winter's over in the middle of December? No, it's just an aberration telling you that even though we're still in the middle of winter, this is just a 1 or 2 day aberration. It's going to go right back down to 20 or 30 degrees tomorrow. It's the same way with this. This is an aberration. Even though this is a very strong upward move, the pet D is translating that we are still in a downtrend, okay? Just so you fully understand this concept. All right, so we have 2 bars generated. Both of these bars are red. Now, what you want to do is take the high of bar number 1 right here, okay? And when we say high, we don't mean the open or the high, the open or the close range. We mean the exact high of the candle wick. All right, so this is the high. And what you want to see is that bar number 2 closes above the high of bar number 1. Remember, both are colored red. If you see this pattern, this 2-bar pattern, that is a sell setup. I know a lot of you are saying, wait a minute, but this has nothing to do with earnings. This has nothing to do with support resistance. This has nothing to do with that chat room that guy talks about where he looks at the jobless claims. You're right. It has absolutely nothing to do because it's only based on the source. And the source is the chart in front of us, what we're trading. Because my mentors taught me, and what I've learned in 4 decades, is that everything comes from the chart in front of you. There's no reason to use useless noise to determine what the market wants to do. Now, if you want to, you can, but there's absolutely no reason. As I often state, I stopped looking at fundamental news over 4 decades ago. And if I'm still here, I'm living proof that you really don't need it, right? I have no idea. You know, people are constantly saying, well, Steve, were those good numbers on the, on the earnings, or Steve, was that a good number on that economic issue? And I'll say, I don't know. I didn't even know there was an announcement, because I don't look at those, because the market tells me what I need to know. So let's look at an example here. This is an older chart of the Dow. Most people would look at this and say, well, gosh, Steve, we're kind of in a sideways, summer market, right? Nothing's happening. We go down, we go back up, back down, back up, kind of a whipsaw market, right? Well, that's because you're listening to outside sources. What is the market telling us? Well, we apply our translator. And our translator simply says that all of the bars are either colored or outlined red. So what's that telling us? It's saying, yes, it's kind of going sideways in a range market, but it's in a downtrend. It's telling you that it wants to go lower. So how can we apply this technique? Well, we want to look for the bar of bar number one, the high, and see if there's a bar that closes above it. Well, here's the high. No. Here's the high. No, we didn't close above it. What do we have here? The high, and we closed above it. So here we have bar number one, bar number two. Here's the high. We closed above it. So that's a sell. Now, I'm not saying that you would have sold the Dow Jones, but you could have, maybe if you're trading, the futures, or maybe if you were purchasing options, that would have been a nice couple of 2 days of downward movement, but not a lot. But what do we have here? Here's a high, and we closed above that high, and both bars are red. So we have another 1-2 scenario. Okay, so we could sell again. And now this time, the Dow fell 800 points in 1 day. Okay, so what happened to the range market? What happened to the whipsaw? You see, the market was telling us it wanted to go lower for days in advance, but we just don't listen to it. We're never trained to listen to that. We're always trained to go to a trading room and find out what they're thinking. We're trained to look at the earnings. We're trained to listen to some guy on TV. If you learn to listen to the market, it's so much simpler. So that's the technique. It's that easy. So let me show you some recent technique examples, things that happened in the last couple of weeks. And towards the end of the presentation, we'll show you things that happened the last couple of days, okay? And remember, everything you're seeing now is displayed coming from the PTS Primo charting platform. You'll see how easy it is to apply this to your own personal trading using this technique. All right, we're looking at ADP, okay? This was just a few weeks ago coming into September. Looks like we kind of made a bottom here. We drastically stopped and then started moving higher. So you say to yourself, well, it looks pretty good. I don't see why, the market's been going higher. I don't see why you wouldn't like this. But if we apply our translator, the PET D on our platform, simply click it on, what's that telling us? It's telling us the market wants to go lower. Maybe it hasn't happened yet, but it wants to go lower. So we don't have to listen to earnings. We don't have to listen to some kind of TV. We just have to listen to the market. So let's look for that 2-bar pattern where a bar closes above the previous red bar. And what do we have here? Here's the high, and it closed above. So here's the 1-2 bars. Here's the high. We closed above. So you could have sold on that day, all right, at the end of August. Now, nothing much happened the next day. I'm sure the next day you would have said, well, wow, I thought it was supposed to go straight down, Steve. This doesn't work at all. Well, remember, we're listening to the market. And so far, the market's still telling us it wants to go lower. And ultimately, it went down coming into yesterday, down 13 points. Here's another example in TMUS, okay? T-Mobile. We're looking at this and saying, hey, Steve, I took that $5,000 candlestick course, and this is very bullish. Look at this. There's a bullish engulfing pattern. I mean, those are one of the most bullish patterns. In fact, the very word bullish is in the title. So you've got to buy this, right? I mean, that's the thing you always talk about too, right? A bullish engulfing pattern. Well, before we can use a candlestick pattern, we have to see what the market tells us. Click on the PET D on our platform. And even though that's a bullish engulfing pattern, the market is telling us it wants to go lower. So we're not going to buy anything because remember, we want what the market wants. And if the market wants to go lower, even though it's not going lower yet, we're not going to step in its way. We're not going to bet against it. So here's that 2-bar pattern. We have a high, and then we close above the high, right? So we would have sold on the close of this day if we decided to do so. Now, nothing much happened for the next 2 days, but the bars are still outlined red. 18 points coming into yesterday, right? Funny how we weren't listening to any news, how we didn't follow the bullish engulfing pattern. We just listened to the translator. Now, someone looking at this letter V, that's a Visa, they would have said, wow, Steve, this is major support. Look at this. Look at the way it stopped right at that Fibonacci support. And I know all the institutions are buying there because I have that $10,000 course I took and that indicator that tells me that the institutions are long. So I don't want to, how can I go against the institutions? They have all the big money. Well, remember, once again, that's listening to what my mentors called useless noise. What is the market telling me? If I apply the PET D, it's telling me that even though we've bounced the last couple of days, it wants to go lower. Remember, we want what the market wants. So we look for that 2-bar pattern, and there it is. We have the high right there, and we closed above the high. So there's a sell. But guess what? We have the high right here, and the next day closed above it as well. So now we have two sells. So we had 2 days to take advantage of the market wanting to go lower, and coming into yesterday, the market fell out of bed. And as you can see, you had many chances to get short later on and potentially could have captured upwards of 25 points. As we go even further, let's look at Zoom. This is the chart we opened up with, okay? Remember, we thought this was an uptrend. All the technical analysis books we've read said this is a classic uptrend. Who am I to say it's going to go lower? Well, we originally wanted to buy, and then look what happened, right? And someone said, but yeah, but Steve, there was some news that caused that to go down. I mean, you don't even follow news, so how would you know that? Well, it's true. But the market tells you many times in advance of any news or any announcement. For example, if we apply our translator, what was it telling us the entire time before that big drop? It was already telling us it wanted to go lower. And if we look for that 2-bar pattern, we have a high here, followed by a close above that. So we're not going to buy it all. We would have sold at the close of this bar and potentially captured 75 points coming into yesterday. I know a lot of you would say, but how did you know 1 day in advance? We don't know. We're only following what the market wants. This is not a predictive tool. Once again, it doesn't predict that the stock's going to fall out of bed tomorrow. It's just telling us at that moment, on a tick-by-tick basis, it wants to go lower. So all you have to do is follow it. As I always say, your job as a trader is really simple. It's just simple. It's twofold. The first thing is to learn how to listen to the market and find out what it wants to do. And your second job is then to jump on board. So if it's telling you it wants to go lower, you're a seller. If it's telling you it wants to go higher, you're a buyer. You don't have to make it any more complicated than that. Unfortunately, we always do, myself included. If you would have seen my screen some 44 years ago when I was trading, there were probably 20 indicators on there. I was following every so-called trading guru with newsletters. I was looking at all the earnings reports, and it didn't work. So if it didn't work then, it's not about to miraculously start working now. I didn't start to become consistent until I started using these same techniques and methods that I teach all of my students, and as well as you in the webinars. All right, let's look at SAM. Okay, this is the Boston Beer Company. All right. Once again, someone would say, well, I think we're going to make a bounce here. But what is the PET-D telling us? It's saying that even though the last 3 or 4 days have closed up, you want to use this as a selling opportunity. All right. So the market's telling us it want to go lower. All right. So that's job number one of a trader. We've listened and it's telling us it wants to go lower. Now we have to jump on board. That's our only other job. And the way we do that is by adding a little structure in the form of this technique, which I'm teaching you today. All right. So we look for that 2-bar pattern. And what do we have right here? Here's the high. And we just barely, it's hard to see on this, but we closed just above it. So you could have sold right here. This was in mid-July, okay, a couple of months ago. Now, as we see, nothing much happened for the next week. Sure, it did go down, but it really didn't fall out of bed. In fact, there's another bullish engulfing pattern, okay? You could have said there's major support here. Look at it, it just wants to hold. But what is the translator telling you the entire time? The bars remain red. So it's telling you it wants to go lower. So you could have, kept your short position if you wanted to. And look what ultimately happened. Coming into this last week, 470 points you could have potentially captured. Now let's look at some other markets, some other time frames. I don't want you to think this only applies to stocks and only applies to daily bars. Let's look at a 1-hour chart of the euro yen, okay, the forex currency pair. All right, this was on the 19th. This was coming into this week, Sunday night. All right, someone looking at this would say, well, we're in a sideways market. Look at, we're going up, back down. So we're in a range. I'm going to wait for it to break out either way before I decide what to do. But are we really in a range sideways market? If we apply the PET-D, yeah, we may be going sideways, but all the bars are colored red. So the market's telling us, part one, it's telling us it wants to go lower. All right, so now part two, we have to add some structure so that we can jump on board. And that's the technique. Here we have a high followed by a close above that high. So that's a sell signal right there. And then we have another one, another high followed by another close above that high. So we had 2 chances to go short the euro yen on an hour chart. And this was just a few days trade where you could have potentially captured 80 pips. That's roughly $800 potentially per contract. Let's look at the same time frame coming in. This was Monday in the E-mini futures. This is the market I primarily trade. All right, this is a 10-minute chart. Most traders would say, wow, Steve, this is a reversal. Look at that. We must have hit some type of real strong support here. We came all the way down, stopped, and reversed on a dime. So I've got to jump on this, right? That looks like a perfect bottom. Well, that's the way I used to make my decisions some 4 decades ago, based on technical analysis that really isn't that consistent. What is the market telling me? Well, we apply the PET D, and it's saying that even though the last 3 10-minute bars have gone up, these are selling opportunities. So job number 1, I listen to the market. It's telling me it wants to go lower. Job number 2, apply some structure to take advantage of that, to jump on board. Now here, once again, we have a high followed by a closing high, 2 red bars. So that's a sell signal. And again, another one right there. So 2 chances to go short the E-mini futures. This was on the 20th, on Monday. 35 points in 2 hours, okay? That's roughly a little over $1,700 per contract. I'm not saying you would have made 35 points. I'm just saying that's how much you had to work with using this simple technique. Now, lastly, we all know that Bitcoin has been falling out of bed. All right, once again, coming into this week, here's a 2-hour chart of Bitcoin. Now, I know it's very difficult to short Bitcoin, but let's say you had a long position. Maybe you wanted to get out and avoid a big drop down. Well, rather than thinking there's support there and saying, well, I'm going to hold on to my Bitcoin, it's got some major support here. If you apply the PET D, click it on our platform, you would have seen that Bitcoin is telling you on a 2-hour time frame, I want to go lower. So if you're long, you may want to consider getting out, or if you were thinking about getting long based on what's your brother-in-law down the street is saying, hey, it's got to be a great buy here, you may want to hold off and wait for a while. Why? Because you're not listening to outside sources anymore. For the first time in your trading career, you're learning how to listen to the market. The market's telling you it wanted to go lower. Now, if you took advantage of this technique, there's 2 bars right there. Bar number 1 is red, bar number 2 is red, and bar number 2's close is higher than the high of bar number 1. See? So you sell, or you get out of your position, or you decide not to buy. Wise choice, because Bitcoin fell out of bed this week, down 8,000 points in 1 or 2 days. I know a lot of people were saying, well, that's because of China. The market's been going down to China, all this stuff. Who cares? I mean, I don't care what the reason. There's always going to be some reason. We don't care. Many times, the PET D will tell you in advance. And I'll show you something in just a few minutes about that. So let's recap. You want to see 2 red bars that are generated. They're colored red by the PET D. Red bar number 2 closes above the high of red bar number 1. That's it. It's that simple to become a consistent trader. But you have to have the PET D. So ask yourself, as we close here, if we go into a bear market, I'm not saying we are, we never predict anything, and we never tell our students what the market's going to do. But if we do go into a bear market, do you think this technique can help your trading for the remainder of the year? Okay, possibly into next year, if it lasts that long. I think your answer is a resounding yes. And for those of you who would like to take advantage of this, we have a great attendee discount for all of you coming to hear me speak today. We're going to have our roadmap for any market promo today. This is the PET D early trend detector. It's our roadmap for any market. The proprietary color bar algorithm includes the add-on. So if you want to, you can add it on to your platform. Most of the major platforms you can apply it to, such as Sierra Charts, TradeStation, Metastock, Thinkorswim with NinjaTrader, MT4. So many of the major platforms you can download our tool, and you can see the colors turn red or green. Now, this also comes with 2 more continuation trading techniques, as well as 2 more pullback trading techniques, entirely different. Also comes with a trailing stop technique. But remember, the best way to apply the PET D is by applying it on our platform, the PTS Primo charting platform. So here's what we're going to do. If you sign up for this great offer we're presenting today, before Friday, we'll throw in a full year of our platform absolutely free. All right, this is thousands of dollars absolutely free that are taken off your price. All right. Now remember, the PTS Primo charting platform just doesn't come with a PET D. There are over 44 years of techniques and methods that I've accumulated that you won't find anywhere else on any other platform like TradeStation or Metastock or Thinkorswim or NinjaTrader. You'll only find on the PTS Primo charting platform. These are things I've taken directly from my years of trading on the trading floor. Now, for example, you'll have our enhanced buy sell line. This tells you the overall trend of the market, 4 different ways to determine it. Our strength of trend tool, a tool that you'll only find on the platform that has an uncanny ability to tell you when a trend is running out of steam or not, okay? Automatic entry levels, automatic stop placements, auto-generated exit levels, okay? But I think the best thing on the platform, this is just a small tip of the iceberg example of what's offered. But I think of all the dozens of things offered on our platform is our signal scan. Because you can literally scan on a nightly basis for stocks, futures, currency pairs, commodities, any market, Asian markets, European markets, Canadian markets, any time frame, and to find out whether that bar is green or red. You'll get that, and it's a great way to find out. So you don't have to go searching through hundreds and hundreds of issues. Now, for example, let me share with you how powerful this technique is, all right, if you're still not convinced. Here's an example of the spiders. That's the S&P 500 ETF. It mirrors the S&P 500, okay? Now, as you can see here, it was moving rather nicely, and then it all of a sudden started to head and drift lower. But if you look at the time, this was going back a year or so ago, in March of 2020. This is when the market fell out of bed, remember that? But it looks similar to what's happening right now. It's kind of rolling over, and at this time, most traders didn't believe what was going on. They think, well, this is a great buying opportunity because every time I've bought, it bounces right back up and makes new highs. And it's true, it had done that every time. But then look what happened this time. It fell out of bed. And we had a really disastrous end of February, March, and some of April, okay? In fact, this is just the ETF for the S&P 500. But if you translate this onto the Dow Jones dropped over 10,000 points in just a matter of weeks. A lot of traders lost everything, all right, because they continued to hang on to conventional wisdom, stuff that had always worked. Remember, everyone's a genius when the market's going up, but when the market changes directions, okay, will you be prepared to trade? Let's see how this technique would have helped you last year. If you apply the PET D on our platform, click it on, we would have seen that the colors changed well in advance of that drop, okay? And at this point, 3 to 5 red bars, you would have said, okay, this is a downward market. The market's telling me it wants to go lower. I'm getting out. And if you were so inclined, you could have used this to actually trade. Because what do we have here? We have bar number 1, bar number 2. Here's a sell signal, all right? And again, another sell signal. And then even more. You could have taken advantage where everyone else was losing money and really taken a big hit. Some of the traders lost everything. You could have been taking advantage. Many of our students did. Okay. Now, I know a lot of you are still not convinced. You say to yourself, well, this is easy, Steve. I mean, I don't need the PET D to tell me the trend. I mean, I understand the concept. I like it. I understand it and I agree with it. But why do I need the PET D? Because I can tell when there's an uptrend or a downtrend. Okay, well, let's look at this example. This is Facebook. Let's say you say to yourself, it's easy. We're in a downtrend. So I don't really need a translator. I can find out for myself. So you're watching this as it's going lower. And then what do we have here? And you say to yourself, well, that's that technique Steve was teaching in the course. I'm going to use it. I'm probably going to make a lot of money because what do we have here? We have 2 bars, bar number 1, bar number 2. Now, even though I don't have the PET D, look at this. We have the high and we closed above it. So I'm going to short Facebook, all right? Make a ton of money. Who needs to buy the PET D? Who needs to become a course member? All right, so you're all excited. And then this happens, right? You say to yourself, how come it didn't work? The reason it didn't work is because if you had applied the PET D, you would have seen that bar number 2 was green, outlined green. Remember, in order for this to work, both bar number 1 and bar number 2 need to be red. So that's why it's so advantageous to have the PET D. Remember, it's translating what the market wants to do. And the translator told you with bar number 2 being colored green, don't short this. It wants to go higher. That's how sensitive the PET D is. Do you see how helpful and what a tremendous edge it is to have this? So just because you understand the concept, don't believe for a second that it'll work without the PET D. You really need the PET D for this to be advantageous. Okay, so let's go back. What is this great offer we have for our roadmap for any market? All right, now, normally the PET D course and application is $49.95. All right, we realize it is expensive, but this is how powerful it is. Now, if we add a full year of the platform, we're talking over $6,100. But here's the great offer we have for you today. We're slashing that down over $2,100. So for a limited time only, we're giving you both of these for $39.95. And here's the best thing about this. We're going to be offering payment plans. So for a small deposit, you can still be up and running as early as today. You don't have to come up with $39.95, a full lump sum. You can come up with a small deposit and have a small monthly payment plan, and you can still be up and running and using the PET-D and learning how to trade with it in the course as early as today. Remember, this is an over $2,100 savings. And this is a great, great offer, but it's not going to last for a long time. This is for a limited time only. So ask yourself, a year from today, you will have wished you became a member of the PET-D course. Don't wait any longer. We only have about 3 months left in the year, okay? Take advantage of this great offer, all right? Invest in yourself. Remember, you don't have to come up with a $39.95. You can still put down a very small deposit and be up and running as early as today. This comes included with a full year of the platform. So here's how to take advantage of this, okay? Contact Pro Trader Strategies. I developed the platform with them, and they're in charge of all the pricing and discounting of our courses. I would personally call them directly because they can answer any question concerning pricing or putting together a payment plan. You're in no way obligated because remember, they're just there to help you and work with you. They can give you a quote and you can think about it. So I really would strongly suggest giving them a call at area code 310-598-6677, and they would be more than happy to give you a quote or sign you up right away. Now, remember, I know a lot of students say, hey, Steve, I don't want a payment plan. I'm ready to purchase it for $39.95. Well, great. Then take advantage of this before it goes back up to roughly $6,100, okay? Now, if you'd like to go to the info page and perhaps sign up online, that link you see at the very bottom of this is the link that will take you there, but it's not a live link. You'll have to copy and paste that onto your browser. But the good news is a live link has just been posted in your chat box. So if you'd like to go to the chat box, you'll see a live link there and you can click that on. It will automatically take you to the info page for this particular offer, okay? Now, I promised I would answer your questions at the very end of class. We have about 10 or 15 minutes left. Thank you for waiting. I know a lot of you like to ask questions and have them answered within the presentation, but now we'll just reserve any time for questions. So just if you have any, go to the chat box and type them in. I see we have one that says, you are showing selling situations. Yes, I am, because that's the title of our presentation. I assume the opposite signal would work for buy situations. Yes, it would. In fact, I have given presentations where I've just talked about the opposite. But we've had so many inquiries lately of people saying, hey, nothing's working anymore. These are students that are prospective students, I should say, people that are interested in becoming students of mine and saying, hey, I'm really having a tough time. I spent so much money on stuff, and the last week or two, it's all gone down the drain. Are we going into a bear market? Do you offer any type of techniques or methods that work in down markets? And for that reason alone is why I presented this presentation today. But yes, obviously this technique can work the opposite. I'm not going to go into the inner workings of going up for buying markets, but you just reverse the rules and it can work, and it works just as well, okay? But yes, the reason is because so many traders are having a difficult time. Prospective students are saying, would you be able to help me in markets like this? Because my stuff just isn't working. And we say, sure. I mean, if you're really a trader, your methods and techniques should work in any market environment, have some level of consistency. And that's where you really find out how good something is. Most methods work great when the market, is in accordance with how the strategy is supposed to be. Everyone's a genius when the market goes up. Everyone, from someone who's just been trading for 2 weeks to someone who's been trading for 20 years, everyone makes money. But when the market changes environment, will your method hold up? Will you be prepared to trade? I hate to say, but in the last 40 years, most traders aren't prepared to trade. They don't know how to reverse and change with the market environment. And that's the sole reason why I gave this presentation today, okay? Someone's asking, can this work on other markets like commodities? Yes. I often state that if we do go into bad markets for a sustained amount of time, a lot of traders like to exit, markets like stock markets and like to get into something that's a little bit more valid in terms of contingent, like something that's real, like commodities. And so, yes, wherever there's a chart, wherever there's a trend, wherever you can get data, the PET-D can be applied. And it doesn't matter if it's intraday, weekly bars, monthly. So as you saw, I showed examples with Bitcoin, I showed examples with currency pairs and with E-mini futures. But trust me, I have traded it with commodities. It works just as well. And you can still apply these techniques. Doesn't matter what market it is, okay? Makes absolutely no difference. So yes, you can get some, and especially, I've traded commodities, and if you've ever traded commodities, those are some of the strongest trends you'll ever see. And so it will really work really nicely with those, okay? Good questions. Any other questions? Someone's asking, how much will the down payment be if I want to establish a payment plan? Well, that's a question for Pro Trader Strategies. Like I said, they have trading consultants manning the phones right now. There's absolutely no obligation. I would strongly suggest, if you're interested or just have questions about pricing or discounts or payment plans, give them a call, 310-598-6677. They're there to work with you. They're very transparent. They'd be open to giving you a quote so you can think about it. The only suggestion I would make is don't take too much time to think about it, because if you come back 2 or 3 weeks later, this offer most likely will be gone and the price will be back up to $6,100 again. So if you're really serious about taking your trading to the next level, just give them a call. Once again, no obligation, 310-598-6677. Okay, well, if there are no further questions, I hope you learned something today. Remember, the key to consistency is simply to want what the market wants. It doesn't have to get any more complicated than that. In fact, if your trading is more complicated than that, that's most likely why you're having a difficult time, and that's most likely why you're losing. Make your trading simple, and all of a sudden become a consistent trader. That's our philosophy at trading markets as well as specialist trading. As we close, I just want to give you, one more word of thanks and say thank you so much for attending. But also, I look forward to all of you becoming students of mine in the PET-D course. Thank you so much for attending today. Have a great day, and I shall see you next time. Bye-bye.